Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for a strategy video. And if you're interested in any of the services I provide, please check out the links in the description below for the Patreon and Discord. Alright, so I am actually doing this live on the Discord. So we have a couple members in here. You may get some more filtering through, but if you are not in the Discord, make sure to join. That way you can hang out with us live. I'll do streams like this, and then sometimes we just hang out, and sometimes we even trade together live. So make sure to join the Discord. You'll find the link in the description below. And let me unmute. Alright guys, so I'm recording now, but like I said before, if you want to hop in and ask a question about what you're seeing, feel free to. It's an open mic, but let me explain exactly what this strategy is. So members who are in the Discord that are in the swing trade service, and everyone in this chat right now is, but to those who are watching and aren't part of the swing trade service, I do trade a certain way. Now this strategy is going to be similar to that. Now there are some key differences. One is I'm a little bit more subjective when I personally trade. So when I swing trade for the swing trade service, I'm not as mechanical. There's a couple reasons for that. Mainly it's due to experience. I've seen so much price action over the decade I've traded, seen so many charts, so I have like an innate premonition about price action at certain times. I may not know exactly what I'm seeing, but the feeling I get tends to be due to me observing this behavior in the past at some point. So I tend to trust that feeling more than anything. But other than that, everything else in regards to how I enter the trades, exits, it's pretty close to what I'm going to teach you. It's not exactly the same. Now this is not going to deal with that much liquidity. Like you're not going to be really dealing with fair value gaps, sell side or buy side liquidity. Now you can use those levels. You can use that strategy with this, but I'm going to do it with Fibonacci, mainly because it's a little easier for people to understand if they're not really that familiar with aspects of liquidity and trading, as well as there is a way to use Fibonacci's to find actual targets to actually get out of trades. So I'm going to actually teach you how to actually use the Fibonacci extension tool, the trend-based Fibonacci extension tool. I've seen many people post about it on YouTube, and a lot of it is wrong. So I'm going to show you a way that it's actually correct. Okay, so we're going to do it on Bitcoin. So we've gone back in time. We're back at the all-time highs of Bitcoin, and this strategy works via trend base or reversal. Doesn't really matter. It's particularly just a pullback strategy, so whether it's for shorts or longs, it will work. We will get into also my recommendation on how you should spread out your positions, at what sort of risk you should be looking to expose yourself to. But again, that's open for discussion. It's just my suggestion, just my opinion on that. All right, so for Bitcoin, I want to essentially show you an example first of a trend trade with this strategy. So we'll do like a short. Starting off, Bitcoin's been in this uptrend. We from the future know it's about to break down here, but let's just say for whatever reason you have not been able to trade Bitcoin, and over coming weeks you finally get money, but by the time you get your money, Bitcoin's down here. The trend is potentially ending. So what you want to see for a trend to end is pretty simple. Look for a swing low. So in this case, this right here, a swing low getting taken out by price. So let's just say you got your money and then price just plummets through that swing low, and you're like, okay, well, what do I do now? Because I wanted to buy because it was going up, but now it's not going up because what's price doing? It's going down, right? So after going up, it's going down. So remember, every time you look at a chart, just remember the one thing I usually say to everyone who listens to me in regards to charts: price does one of three things: up, down, or sideways. Okay, it's doing one of those three things. So once you identify one of these three things price is doing, that's the direction you should be looking to get your trade in. So if you see that we're breaking down, we've taken out a low, so that means a new downtrend has likely begun. How would you get in? Well, this strategy is pretty simple. You just need about three things. Okay, about three things. One, you need to be able to see swing high, swing low. I'll teach you a very simple way to do that. If you know what pivots are or a fractal is, again, very easy to see. It's very simple. So we have our swing high already, right? We have a couple swing highs. Now, you could go from the all-time high, but I wouldn't. You want to go, in my opinion, for a swing high after a consolidation and then continuation, right? So you could go from up here, but you might as well just go from over here, okay? Because you consolidated, then broke down lower, okay? So here's your swing high, this little pivot right there. And the way you know it's a swing high is, take a look at this candle, has the highest point from the candle to its left and to its right. So that's what a pivot is, that's what a fractal is, and a swing high is no different. Again, swing high has a little bit more price action history, but you can quickly spot these candles, whether it's this one up here, this one right here, or this one right here, here. So these are all little pivots. Let me actually mark these for you so it's super simple to see, and everyone is at the same place. Let's actually do a little emoji. We'll have a little bit of fun with it. Let's see. What do we got here? What's trading? Wow, Trading View's updated. Trading View has updated. it's got the emojis. We'll do a thumbs a point down. There we go. So right here, right there, you have one right there. You have one right here, and this is the one we're gonna use. Okay. So this one right here, where the finger is pointing to. All right. So hopefully that's very clear. Now, what we need next is a swing low. So now you're just watching for price to make a swing low. So just like a high candle, you're looking for a low that has a higher low and a higher low to the left and right. So the candle to the left has a higher low than this low, and the candle to the right has a higher low than this low. So this right here would be your swing low, okay? So if we're looking to get in the trend that we're currently in, you want to use the Fibonacci retracement tool, pull from the high, the swing high that you want to use, okay, and pull down to the low, okay, so from the high to the low, because we want to see price retrace back up from the trend it's currently in. That's what the Fib retracement's really for. Now, here's how the strategy works. Okay, so a strategy is very similar to how I do the swing trades. Not exactly the same because it's not really using liquidity and it's more mechanical. You would have your orders to go short spread out through the Fibonacci levels here. That's simple. Okay, so in this case, because it took these many candles, you got your low and you're actually trading right here at the 23.6. If you want to open up a short now, you would then do another short here at the 38.2, then at the 50, 61.8, 78.6, etc. So this area here would be your short zone that you would build. Okay, you would build your short zone, and then obviously your invalidation would be what? Well, the pivot high, because if this pivot high gets taken out, then are you really in a downtrend, or are you in just a bullish pullback, or maybe you're in a larger consolidation, etc. So this would be your invalidation point. Now, how would you actually safely build out this position? It's actually pretty easy, but this is where the challenge of the strategy comes in. Okay, this challenge is to control your greed. So what you have to do is start small and then build big. So think of a pyramid upside down in your head like this. This is what you must do. Now you have a couple options here, okay? And I want to explain something. Let's say you want to, essentially use 10 to 15% of your account, which is not that big a deal in one trade, okay? You have to think about relative. So if you want to use 10 to 15% of your account, you wouldn't want to use 10 to 15% of your account at the 23.6, because if price were to, let's say, go all the way up to here, your drawdown at 10 to 15% of your account would be about 30%. So that's not really realistic. What you need to do is get into the habit of starting small. So let's just say we're going to do in between 10 to 15%. So it could be anywhere from 10 to 15. So in the middle or exactly at those levels. No more than 15, but it could be as low as 10. All right. So if you did what, 1% at the 23.6 right now, so you could just market it in. So you market it in short 23.6, then another 1% here at the 38.2, another 2% at the 50, and then you could do 3% at 61.8. So now in totality, you have 7% of your account exposed, okay? If you get filled here all the limit orders get filled here, you have 7% of your account exposed. Then if you did, let's say, instead of 3%, you could do double 6% or 4%, whatever. You could have anywhere from 10% if you did 3% here, 11% if you did 4% of your account here, or 6%, then you'll have about, like, what is it, 13% of your account here. Okay, so you're still within your threshold. And then if you're wrong, your average entry should get brought up to around the 61.8, maybe slightly above it. And if you're wrong, you're risking, of 15% of your account, you're risking about 19.5%. Okay, so that's much better than risking 30+% down here. Sorry, not even 30, but it's more than that. It's like almost 45%. So that's why it's super important you get in the habit of building slow, because yes, 20% is not the best risk, but it's much better than 45%. And the probabilities increase more and more in your favor when you reach these levels for a pullback down. Even if it doesn't mean taking out the lows, the probabilities of you making a move up to these levels and then pulling back, it may not lead to the low getting taken out, but at least it will lead to what we call a higher low, right? So you'll have an opportunity of being out of drawdown and potentially being able to make a decision out of the money, in the money, and getting out with minor losses or a minor win. Whereas if you did it all your account down here, you never get that opportunity, right? It's very unlikely if you're going to have an uptrend for price come all the way back down here, within a reasonable time frame. So that's why I'm just saying you want to get into the habit of the upside down pyramid, this sort of way of looking at price if you're going to do this. Now, what would your average entry be? It's actually pretty simple too. You don't even really need a calculator. Let's say you did, just picture this, if you did 10% of your account, 2, 4, 6, 8, 10, so 2% at each of these levels. What would happen if all these levels got filled? Well, you'll be at the 50%. The 50% Fibonacci level. Exactly, it'll be almost exact, okay? It'll be, because it's the median of this. So if you did 2% at each of these positions, areas to fill your position, your average entry would be about 41,460. Right? If you did what I showed you first, your average entry would be closer to the 61.8 and probably slightly above. So there is an argument that, hey, you could do even add-ons if you want, but you will have a better average entry, if you do a pyramid rather than, let's just say, like a rectangle, okay? A little box. All right, just so that, again, that's up to you. That's your decision. You can make that decision for yourself, but I personally like the pyramid because it leads to more money. And yeah, so essentially what you're now looking for is price to come back up, fill you, and then obviously you want continuation. Now let's actually see if we get filled. Okay, so let's play the price here. So we already got filled here, right? So if we're doing everything, if we're doing all the levels, again, you don't have to do every level. You can only focus on maybe like the 50% or the 61.8, whatever you want. If you're doing all the levels, we already got filled the majority here. I don't know if the 78.6 gets filled. Let's see. It's lagging. Keep it going. Keep it going. It's going. Bitcoin's building. Okay, so you actually get filled everywhere. So your average entry would be around the 61.8, probably slightly above, but we'll actually do it like slightly below, just in case I'm wrong, but I'm pretty sure I'm right about that. We'll move it over to where you originally got in. So where you originally got in was probably, if you're trading the 23.6 as well as marketing in right here. So your average entry got bought all the way up to here because of your position sizing, and that's key. And then your stop loss would be above the high here, because again, you're trading, this is a structure. If this breaks, then you're not in a downtrend currently. You're probably either in a bullish retracement or you're in like a much larger consolidation, which you shouldn't be in anyway. So this is, you want to put the stop where there's an invalidation. So before you even put any trades on, find the invalidation point and see what the risk is, and that should determine your order size anyway. Okay, so if this was much bigger, let's say this was going to be like 80%, you wouldn't start, you may not trade it at all, or you wouldn't start with, I'm going to do 15% of my account. You might only do like 5% of your account. Okay, hopefully that makes sense. All right, so how do you get out? So this is one of the reasons why I'm recommending Fibonacci for most people. where do you get out? So you have a couple options, obviously. So you can look to try and just like slowly come out. Like let's say you're only targeting the bottom here. I wouldn't do this, not normally, because it's not really worth the buck. What you want to do is now use trend-based fib extension. Okay, so the way you use trend-based fib extension is pretty simple. Okay, so if you're trading the trend, we're playing the downtrend. We're trying to get short off the pullback, which we have. Now you want to go from the same swing high and swing low with the trend-based fib. So pull from the top, from the swing high, down to the swing low, like this. Oop, and you do that right, and then pull back up to the swing high. Okay, so it's from swing high to swing low, and then back to the swing high. Okay, and then once you do that, look down, and these are your targets. Now, the way you're supposed to do this is if your entry is at a level, so in this case we're at the 61.8, then in turn you should be targeting the 161.8. Okay, if it was at the 50, you should be targeting the 150. If it was at the 138, if it was at the 38.2, you should be targeting the 138.2. At the 23.6, 123.6. Okay, so in this case you're looking for to get to the 161.8. So that's its measured move. Okay, from the retracement to the trend, because you use the retracement Fibonacci to get in when the trend is resting, and then the trend-based Fibonacci is telling you where the trend is likely going to continue to after that rest, after that retracement. Now, you don't have to do this where you take it all out at once at 161.8. You might want to scale out just like you scaled in, right? So you might want to target the 123.6, take off 10% here. 138.2, take off another 10%, then 150, maybe take off 30%, etc. Right? So you don't have to just go in and out all at once. You can look to scale out. If you don't want to do this, you can try and look for it to become a trending play. So maybe you want to use, I don't know, like a moving average or something, or Ichimoku. You might want to get in off of a pullback, whether it's a long or short, in this case a short, and then maybe if it starts trending again, just follow like a moving average or something. You do which is best for you. In my opinion, doing this tends to do quite well. And if you look at the RR for this, it's quite high. Okay, so for this sort of play, you're risking about 20% to make just above 51%. And again, this is on the daily chart without leverage. I'm not taking into account whatever leverage you're going to be using. This, yes, does work on time frames from intraday, so it could be lower time frames, works on the weekly, works on every time frame. Okay, so you just need to be able to determine if you're in a trend, whether it's up or down. And then once you're completely in, now it's just a waiting game, right? You do not touch your stop loss, you don't do anything, and then you just let it happen. So if it breaks down, that's great. If it doesn't, then it doesn't, and now you're good to go. Now, I want to give an example here. Let's say the 78.6 didn't get filled, okay, and we came all the way up to the 61.8 and then dumped, and we took out the low of the swing low that we used to build the fib retracement. Well, what you should do then is take out the order that didn't get filled at the 78.6 and ride out with what did get filled, okay? Because that swing low is gone now. It's been taken out. So you don't want to keep that going. Also, if you want to try and mitigate risk more, once this gets taken out, and this works for the long side too. So if it's a swing high that gets taken out for your long, it's the same thing. Once this low gets taken out, you can look to move your stop maybe to this new swing high right here. So cut your risk even more. Or if you're comfortable, you might even want to move your stop to break even. You do what is best for you to stay consistent. Because consistency, you'll find that this strategy works. And again, this strategy pairs with a whole bunch of indicators and stuff. So it's more of just a way of trying to get into a trend when you miss the beginning. Okay, so keep it going. Let's see if we get to the 161.8. We might have. Let's see. We did. So this would have been fully filled. So this is like a short example with Bitcoin. Okay, and this again, if it trends, this works. You can use this strategy for like reversals. It probably will have a lower win rate, but it's again, it's very similar. Like, it's going to work the exact same way. And again, like I said before, it also works on multiple time frames because time frames trend, right? Some time frames trend when nothing's trending up. Like, so if the daily could be in a range, but the 5 minute could be trending, so you can do it on the 5 minute too. I will say, like, on the daily, you're always going to get the best bang for your buck on the daily. You're going to get the most out of that. So we'll keep that there for now. Let's keep it going. I want to see if I can get like a long. I want to give a long example real quick. Let's get to where Bitcoin reverses. So we're actually going into the FTX debacle here. So let's let that play out here real quick. Let's see here. And again, you're just looking for a change of character, right, in this case. Now, before we go further, obviously, like, you could have been trying to trade in here. It would have been a bit difficult, but you definitely could have. Like here to, was it here to essentially, that's not one, this right here, pretty much, you might have been able to get a short off. So if we go from this high pivot to this low pivot right here, you did get a short off, and depending on your take profit, you might have been able to take some profit off as well. Just depends on how you were looking to exit position. And again, if you do it, I would prefer, if I was trading exactly this way, I would scale out rather than waiting for one position. So here, yeah, you would have been able to take some profit off for sure. And if you did that, you would definitely move your risk to break even for the most part. So you probably would have been filled, probably would have your entry around this area, the 38.2. So that would have been a nice little trade there within this range, right? Because this ended up being like a pretty gross range because of the FTX stuff. All right, so let's actually take that off. But I want to do, instead of another short, I want to do a long example if possible. Let's see. Let's keep it going. Let's see. There we go. Okay, so this is what I was waiting for, because I remember that we were going to blast through here at some point. So now you're seeing a change, right? So you can actually say this is more of a reversal strategy here, because the trend's not truly fully established, right? Because you made new highs, right? So you had high pivot here, making lower lows, but finally you broke through those high pivots to potentially make a higher high. So you don't really have a confirmed trend up yet, but you are showing signs of a change of character, right? So now what are we going to look for? We're going to look for a swing low and a swing high. Well, we have a few. So this is where it does get a little subjective. I'll tell you what I recommend, but it gets a little subjective. You could look for the lowest point but prior to the move up or move down, respectively, right? Highest or lowest point. Or you can look for the most recent pivot, right? The most recent fractal, swing low, and then pull from there. I personally like the most recent. Okay, that's what I like to do, but it doesn't really it doesn't really matter in the end. I haven't studied it enough, like I haven't backtested it enough between which point is better. It's all kind of too subjective to be I would say one or the other is better. I just would say stick with whatever makes you comfortable. For me, it's the newest pivot. I like to see, the pivot, and then boom, it goes up or down. Okay, so I should use that pivot. And then now I'm going to be looking for what? A swing high. So I want to see a swing high pivot, an established swing high pivot. So this pivot right here wasn't established because this high right here broke through it. And then you could say that this was potentially a high pivot. So you could have drawn from here to here, but quickly it got invalidated because it didn't fill anything, okay, and it broke out. So because it broke out, you can't use it, so it's done. So you didn't get into a long or anything from that, so now you're going to just continue to wait. Now we potentially have a pivot right here, and we do. So let's actually draw the fib retracement from there. So since we're trying to go long, right, we're trying to hop into the potential upswing, you want to, instead of starting from the swing high, we're starting from the swing low, then pulling the fib retracement up to the swing high. And now we're going to see, can we get these levels filled? So just like before, you can choose your sizing, right? So you're going to do 1%, 1%, 2%, 3%, maybe 6%, or maybe you're doing, a 2%, 4%, 6%, whatever. Like, just keep it within a threshold. And the threshold for me is anywhere from 10 to 20%. However, the 20% is when the actual risk of the invalidation is quite low, and it doesn't exceed 4% of my max principal loss. Okay, All right, that's very important. Okay, it's okay if you lose, 5%, 4% here on very small positions, of your account. But if you're losing 5, 6, 7% off your entire account, that's very hard to build back. Okay, so I would keep a threshold of like 10% of your account will be ultimately exposed, and of the 10%, I don't know, maybe you're going to risk 4, 5, 6% of that. Right, so it's like comparatively risking 10% of your entire account rather than just risking 4 or 5% of 10% of your account is all the difference. Okay, it's extremely important you do that. You get in the habit of that. Okay, all right. So let's see if we get a pullback in Bitcoin that will then give us an opportunity to potentially go long here. Okay, so 1 second here. Let's see. Let's go forward. See it going. Okay, so you would have gotten filled here, and that's it so far, at least. Let's see if it stays out. Okay, so you would have gotten filled here. Okay, so the 23.6 would have gotten filled. So a very small position, but that's part of the game. Sometimes that happens. Where would you have taken profit? Again, you use the trend-based fib tool. Same thing from the swing low to the swing high that you used, and then back to the swing low. You have your targets. So since you got filled at the 23.6 and it broke above the high here, this is how you would adjust. So you would not keep your other orders on. Okay, you would not keep your other orders on. You would not keep your stop loss all the way down here. Okay, you only do this because you're looking for your other orders to get filled, and naturally because of that, the RR will get better, because your average entry would get do better. Because you have to cancel these orders because only one level got filled before the breakout, you then move your order back all the way up to where essentially your entry is, or the next swing low. Okay, that's what you must do, because if you don't do that and it pulls all the way back, and you still have your orders filled there, what'll end up happening is you may find yourself in a swing failure structure, right? So you don't want to be in that, because you could easily, Bitcoin breaks up, this is a swing failure, and then dumps, right? So because that's a different structure than what you were playing originally, and that's why I make it very clear, you don't keep these orders open if the area you're getting to is already being get to. All right, so you have to make sure you do that. So your risk is obviously very small, but comparatively to what your reward would have been, it's also small. So since you got in at the 23.6, you should be targeting the 123.6. Okay, that should be your target. So you're always looking for the measured move if you're going to use the trend-based fib tool as a target getter. So let's keep it going. Keep it going. The price is back. Okay, so back down. So you actually did not get filled, and you end up getting stopped out, and that's okay. Okay, that's okay. Again, it's all about getting small losses and big wins in a controlled manner. So essentially now what you're going to be looking for is, again, another re-entry. So nothing has really changed, save that you just unfortunately found this to be a swing failure, right? So, but you mitigate your loss by not keeping yourself exposed, but there's nothing telling you can't stay in it. You can't reopen into getting into a position. Okay, so what you do now is simple. So you use the same swing low, because this is the low of invalidation, right? So far, this is the low of invalidation. If this gets taken out, that means that you're not in an uptrend anymore. Okay, you still broke through these highs, you still made a higher high, and even though you took out this low, it's this low that is the invalidation. Okay, so you pull from there and you go from the next high pivot. So it's going to be right here, and essentially you would have gotten stopped out here, so you may have been able to mark it. Actually, you would have probably been able to mark it in here, so you would have gotten in at the 50. Okay, you would not have probably gotten in at the 23.6 because by the time you got there, you were still in this trade. Okay, and let's go forward. So here you would have entered, and so far it looks like you do not get another entry. Let's see here, long here. Yeah, I don't think you would have gotten in at the 23 or the 38.2 in this scenario. You would have been just at the 50 essentially. All right, and then we look for the same. We'll see if it breaks out first. It does. So okay. So now we're going to be looking for where will we take profit. And again, you do the same thing as before. Use the trend-based fib tool from the swing low to the swing high. I did that wrong. Got to redraw that. Let's move that over just a little bit. Right there. Okay. So now you should be targeting what? The 150. And again, your stop loss was down here. Okay. But now because it broke through the high again, it's out of this retracement. It's out of it. You move your stop either to your entry or the next swing low. So we'll just do a swing low like right here. Okay. And now we want to target the 150. So that's at 29,723. So up here, right there. And there is your target to get to. Okay. Let's see if you get there. Keep it going. And you got there. Okay. So this is, again, this is a very, very simple strategy. It's not like, it's not revolutionary. It's something that has worked for a long time. It's similar to how I do the swing trade service, not completely. Again, like I said, I target mostly liquidity levels, and I'm a little bit more what's the word, instinctive on how I kind of do this. So you know, it's not as mechanical, but this is similar, especially when you want to get into the habit of learning how to break down position sizing. Okay, that's the best part of this strategy is position sizing. You don't have to guess. You just have to have a total account risk you're comfortable with. In my opinion, it should be 10%. Could be less. Okay, could be 10% or less. And then you break it down 1% here, 1% here, 2% here, 3%, etc. Okay, if you do that, what will end up happening is you'll find that your account has a steady equity curve. You'll steadily grow because the strategy is pretty clear. Okay, as long as you can identify swing lows and swing highs, which you should be able to, but if you can't, there are plenty of indicators that can help you. Again, you can do one of my favorite ones, pivot points high low. That's a great one. Let me actually pop that in now real quick. I may not have enough room though. Let's see. We'll get rid of this right now. So we'll do pivot points high low real quick. It's a great one if you have trouble seeing you know, swing high, swing low. This is one of the ways you can do it. Okay, it'll help you identify them. You can draw from that. So as you can see, we drew from this one to this one. Actually, well, this one right here. Okay, so this one, same area. Doesn't really matter. And then there you go. You can draw from there. So if you can't see it yourself, there you go. But again, it's simple. It's just whatever candle's high has a candle that's to the left and right has a lower high than that's high, and the same thing to the low. If this candle's the pivot because its low is lower than the candle to the left and the candle to the right. Okay. So does anyone have any questions about this strategy, or you know, want to interject on anything? Just let me know. Just no problem, Nasho. I guess it's really not an issue. I muted you, but Nasho, just type in if you want me to unmute you, like you have a question or you want to type in a question, feel free. Yeah, but yeah, it's again a very, very good strategy. It's worked forever. It's one of those that work forever.
Yo, could you maybe show an example on a smaller time frame?
Yeah. So let's go to we'll stick with Bitcoin. Why not? I'm gonna get rid of the drawings here. Let's go to let's do like a 15-minute. We'll do like a 15-minute. I think it's like a good even ground, and we'll see if we can find a good example there. Okay. Let's keep it going. Now 15 minutes. Any smaller time frame is going to be, again, you know, it's going to be quicker, choppier, but in the end it's similar. You do need to just be able to identify if you're in a trend, up or down. Like right here, it's pretty clearly like to the downside, to the upside. Let's see here. See if we can go back here. Okay, so let's go from, so essentially we're definitely going up. Let me see here. Yeah, so we're going up. You took out these high pivots here. So let's say you just missed out on all of this. You missed on this range here, and essentially you broke the highs. Okay, you broke the highs. So character has changed. You're now looking for an opportunity to get in long. Now, the reason why you can't do it here, because you would have tried already, right? So here's your low pivot right here. So we'll go from, you can go from, actually, let's see if this is lower. So 27.893. So technically, this is a low pivot as well, or here. Like I said, I like to do the most recent one. If it's equal lows, like to the candle to the right, I don't do it. But this one is slightly lower, so we'll do that. So if I did it from here to here, notice how actually it does actually pull back. So within one actually no, you would have missed it, because this one candle, let's actually go back one more time. Here, I'll show you why. So you can't draw this as a high pivot just yet, as a swing high, because it doesn't have the candle to its right, to show you that it's the highest high right now. But after this right here, now it is. The problem is, by the time you see it, this level's been filled. Now you could mark it in easily, right? You could definitely mark it in at 38.2, and you could do 1%, or maybe because it, it came here, you do 2%, and then you do the same thing, then like 3% here, whatever. So you could definitely do that. You can mark it in right here, and if you did, we already know the future, you would have been rewarded. I mean, clearly, you would have been rewarded if you did. All right, but let's try and get an example that where you didn't have to mark it in. Let's take this off real quick. All right, so let's just say you missed this too. All right, and there's a pivot. So let's draw from here to here. All right, so there's your pivot. Again, if you want to do every level, you do the 23.6 all the way down to the 78.6. It'd be 1% here, 1% here, whatever position sizing you want to do, whatever the separation is. Just before you do that, I implore you, before you do that, please have a total risk already decided, okay? And you must look at the potential loss before you put a limit order at all, okay? So if let's just say you did even orders, 2% at each level, because you're risking 10% of your account. Well, you're exposing 10% of your account. You're not risking 10% of your account. And let's do a long, not a short, right here. All right, so this is where your entry would have been. Here's what the risk would have been on 10% of your account if you did 2% at each level, because your average entry is going to be at the 50, because 2, 2, 2, 2, 2, and then you do divide by 5, okay, because you have 5 positions. It's going to be around the 50% Fibonacci. That's how the math works. If you do it the way I showed, like kind of like the pyramid, you're almost always going to be near the 61 point, maybe slightly above, slightly below, so around the area. So again, you're risking anywhere from 0.9% to like 1.2%. If it comes back, let's see if we get filled here. It may not. Okay, so one order got filled. Keep it going. 2 orders got filled, and I would say that got filled as well. So you actually did get filled all the way to the 50. Now that doesn't mean you're at the 50. You're probably, depending on your position sizing, somewhere towards the middle here, around this area. So you would be in slight profit. So we'll actually just move that down like right. Move that up like right here. I should be doing it on the other one. Hold on. Like right here. Yeah, like right around there. That sounds about right. Again, you're keeping this risk here because you're only gonna move this up if we take out the highs here, right? Because it's still within the retracement zone. You're still within the retracement zone. So let's keep it going. I still haven't even looked at the target yet. I'll look at a target if it takes out the high. Okay, let's keep it going. So you're just trading back at that 50 line. Okay, you popped up, you did wick through, and you trade through. So now what you're going to do is simple. You would close out these unfilled orders, which is, that's what you're doing. So if you did, what, 1% here, 1% here, it's 2%, then another 2%, 4% of your account. Could be more, it could be 1, 2, and then 3%. So it could be anywhere from like 6% of your account. It just depends on how much you're willing to expose. Okay, so now I would move your stop probably towards the swing low, but you could argue to break even too. It's whatever you're comfortable with. All right, then what you have to do is then use, again, same thing, the trend-based fib extension. Go from the same swing low to swing high. So boom, boom, and then boom, and then back to the swing low. All right, and because you're nearing the 38.2, you could look to target the 138.2, or you could look to target the 150. You want to target wherever you're closest, but if you want to target the 150 because you're in that zone, feel free to. Or if you want to use a different take profit strategy, feel free to. Again, this is just one of those ways that if you are someone who has a problem taking profit, this is one of those ways that might help you. Okay, that's why I'm pairing it together. So you would target the 138.2 to take profit, and again, it's the 15 minutes, so percentages are small, but as you can see, the RR is pretty good. Now the original RR, let's see, was down here. So you're still looking at a positive RR, but it's much smaller. You're looking at like 1.3 to 1.4 RR. But because you're able to move your stop loss up and cut your risk, you're either at a 5 to almost 5.5 to 1, or you're potentially just at break even, depending on your perspective. Okay, and then you just keep it going. Oh, and then there you go. You got clearly filled. Okay, and this right here, I will say, this right here is an argument that you may want to try and pair this with a trending strategy, like maybe you want to use Ichimoku or a moving average or whatever. All I'm saying is, whatever you choose to do, be consistent. Either way, you'll make money if you're consistent. And the most important thing of this strategy, no matter what time frame you use it on, is the position sizing. Right, like you must fight the greed. You must be okay with only getting one order filled and then letting it go. And it's hard. Don't get me wrong, it's very hard, but it's important, because if you can do that, you'll find that this is a very consistent way of trading that is similar to the way I do the swing trades. Okay, let's try to do even a smaller time frame. I don't know. I won't, like, I haven't really looked at this on the super small time frames, but let's do it. Let's see. Let's go back a little bit. So I want to see. Let's try like a range of some sort. That's gonna be pretty difficult, because you're gonna stay away from those ranges, because if you can't identify if you're going up, you shouldn't be trading. So let's see, like right here would be a pretty good example, but this is definitely a winner, right? So like, look at this. Like, so here's why, like, on the 5 minute, it definitely would work. Essentially, you just have to shorten your time frame. So you're clearly in a downtrend, right? So looking at the 5 minute, right, you're in a downtrend. So you need to wait for the signs of an uptrend starting. And again, just keep asking yourself, are you making lower highs and lower lows? And if you can't answer that, then you're probably in a range. But if you can't answer that, then you know whether you're up or down, right? So like, if you're having trouble seeing that, so like right here, you should have trouble seeing that, right? Am I going down or up? If you can't see it, like you're not seeing lower lows or higher highs or whatever, then you know I'm probably in a range. So trust your doubt. So if you have doubt, then like zoom out a little bit and be like, okay, I don't know where we're going, because we don't know, like the market doesn't know where we're going. Okay, so what you would look for then is obviously a change of character. So we have to wait and see, are we going to have a change of character, or are you going to have continuation, right? Because you could argue, all right, so we've been going down, maybe I can do a short. The problem is, if you do that, so let's start from the swing high here to the swing low. I guess it would be this one right here. So we'll do this swing low, yeah. So right around there, you could argue, well, you could argue that this is a short opportunity, and then if you did take it, you started off pretty good, probably end up losing. Let me just double check. So let's see what the trend base does. Start from there to there, pull back, and yeah, so you wouldn't have gotten filled out, but you definitely would have been at least trading in the money for a while. But it definitely would have come up. This would have been a potential failure of a short, potentially. It's kind of hard to say, because this is not really that clean, but it is a downtrend. So I would definitely I'll put it in the loser column, just like the one before. Now, if you were one of the ones who didn't take this trade and you found that you came across it here, what you would be doing is looking for a long, right? So this is where you do have to be somewhat aware of a change. And that's why position sizing is very key, because sometimes you'll find yourself at the end of the trend, right? So this is just you being at the end of the downtrend that happened here, and it happens. It's going to happen eventually. What do they say? The trend is your friend until the end, right? So, but once that happens, that doesn't mean anything. All that means is like, oh, okay, so I should start to look to essentially go long, right? I should change my perspective. So if that's the case, you want to essentially start to do that. So let's just say that you're here and you want to go long. It's the same thing as before. You're just going to use the fib retracement. Now you can go from here to here. Okay, could go from here to here, and then you would get filled on all these levels, and then obviously your validation is the low. Okay, the reason why you're going long is because you took out the highs here and here, and essentially you're looking for a lower high to form, and you'll see if you're getting in the beginning of that. So everything's getting filled so far except for the 61 point and the 78.6. These are the only places that didn't get filled, right? And then if you do the trend-based fib extension from the low to the high, pull back down. All right, so since if I did the math top of my head, the 23.6, the 38.2, and the 50 are the ones that got filled, you're probably closer towards the 38.2. So you would target the 138.2, which is right here, right? So let's see where we end up. We'll see if you get there, and you do. Okay, so like this can work on smaller time frames. Just be prepared. You will deal with chop here and there. You're going to deal with more chop. It's just the nature of things. But just be okay with it. Like, you just have to be okay with it. It's the same thing. It's the same thing over here, right? So like if you're in a clear downtrend and you're not seeing any signs of the downtrend ending, then look to trade with that. And same thing with the uptrend. So just kind of trust your eyes. And again, just if you're having trouble with it, like turn on a moving average or something that'll help you objectify the trend potential. Okay. Any more questions on it? Or everyone clear on that? Feel free. It doesn't have to be questions, because just be observations. Yeah. Feel free.
So, I've got one. I know you've mentioned it and you show it quite often, but since you're going to be recording, how would you identify the change of the trend earlier? Or do you use anything to help you with that?
Yeah, for me, it's definitely not something that's gonna. So the way I look at it is, for trend changes when it's to the upside, I look at the lows the most, right? So you could say your confirmation. So again, this is a little subjective, but you could say the confirmation is the highs, right? So if the high gets taken out, that's like, oh, the character is changing. The character is changing. But what I keep my eye on to try and get an early jump on it is the lows. And the reason why is because you get the lower low, lower low, lower low, and then what happened here, right? So if you draw like a let's go back again, right? So let's say you draw a trend line. Okay, you're drawing a trend line, and you're like, okay, we're in a downtrend because we haven't broken this trend line or something, right? So something like that. We're in a downtrend. So every time we've come to that trend line, all we've done is drop, right? So we came up, drop, and then drop, right? But what's different and interesting about this is we dropped again, and now you're getting another higher low, right? So this to me would be a key point to start to get in. And the reason why is because it's very cheap to be wrong, right? So instead of waiting for the break, now you don't do this with everything. You don't do this with everything. You have to know certain assets behavior, certain markets behavior, right? There are certain times where you like Forex is a good example. Like, you let breakouts happen in Forex because when they go into like a trending move that doesn't pull back, it's very, just stay out of the way or be on the train. Crypto when it's not in a bull market is very, very tough to deal with breakouts because it fades a lot, right? When it's not in a bull market, they fade out. It's very hard for them the cryptos to stay consistent. So if you can get into them earlier, prior to a break, that's very strong. So for example, if I saw this, I would be like, okay, I should probably go long, right? I should probably look for a long. Now, with the strategy I'm showing you, it wouldn't pertain to this. It just wouldn't. I would look to go long, you know, somewhere here. So I might just mark it in here. And the reason why it's good to do this, because it's really cheap to be wrong. You have your invalidation as the low, right? So if this low gets taken out, guess what? You're wrong, but it's cheap. It's better to be wrong down here than wrong up here. So it's like, because the invalidation's the same. Because if it broke up here and then pulls back, it still can go up unless it takes this out. So I'd rather just get in here and be wrong. And if I'm right, well, I have a better entry than up here. So I look for the lows. That's how I look at it. If I'm trying to get into something quickly and I'm seeing potential change of character after a prolonged trend, for its respective time frame, then I would definitely look to hop into something on the long side if I'm seeing higher lows starting to get formed, for sure. And in this case specifically as well, like the trend line's been tapped quite a bit, so it's weakening out. And if this is forming, then you know this trend line's it's very unlikely to hold, in my opinion. So yeah, that's how I would look at the lows. And then same thing with shorts, right? So if you're like, you know, your confirmation is if it's, you know, if you're in an uptrend, like when's that trend going to end? Like when do you think it's going to end? Your confirmation just is the opposite of long side. You have to wait for the low to get taken out, right? Like that's, oh, we lost the low, so we're in a downtrend or the uptrend's over. Well, then I start to look for the highs. Like I'll start looking at the highs. Like, okay, we made a high here. Oh wait, we just made a lower high. Oh, another lower high. Oh, okay. And then you know, oh, we made another lower high here. It's weakening out, and then it takes the lows. So you could look at the highs as another early indication when the trend is starting to weaken. But again, it's just an indication. The confirmation part of it comes from mostly when the highs get taken out for the long side or the lows get taken out for the short side. Can you explain the 3 merging trend lines on the algo chart? Yeah, so it's not that crazy. Henrik was making that seem like it was like some magic or something. It's just a trend line. Let's pull that up here. Let's see here. So yeah, Algorand is one of our bigger positions, my biggest position right now in crypto, but it's also like in the steepest drawdown, but again, slowly adding on to it. So the 3 trend line, so it's kind of hard to explain, but I see price action in tracks. It's kind of odd to tell you. Like, so these key points here, this triple bottom, as you can see, plays out far into the future. This is why I tell you guys to have fun drawing trend lines. What you'll find is, for whatever reason, I don't have the answers, but for whatever reason, price will come back to these tracks. I don't know if it's the algorithm. I don't know why, but price comes back to the tracks over a period of time, and once these tracks end, usually a new cycle begins. So we're in the down cycle for algo, right? We're in a down cycle for algo. If you go back in time and you use the kind of the same thing from like over here, I don't know if I'm going to draw this super cleanly, but we'll go from like here, hold on one second, like here to, oh, I gotta get closer, 1 second. Again, forgive me if I may not draw this perfectly, so just forgive me. From like here to here, and then like here to here, and then like here to here. Now I don't know if this is the track. I would actually have to look. I could be totally wrong. This might not be the up track. And then you want to go from here to here as well. Okay. So what you'll find is price tends to come back to this stuff for some reason. So I didn't hit this yet. Well, I'm not gonna say yet. I just didn't hit this. This is not the track then, so I'm wrong. So it's probably this one. So this is the track. So like this, for whatever reason, this played a role continuously for the entire upside of algo. I don't know why. It just does. I guess because maybe you can argue it's like part of a structural pattern like this, I don't have the answers as to why that happens. I just have noticed it over the years. So sometimes I'll have it drawn out when it's on a specific track. And what I found is like these down tracks, what ends up happening is what you see. Like you get into just a downtrend. Like you just get into like a bear trend, but they tend to hold out for quite a long time, for the foreseeable future, and then usually it leads to a pretty major bounce. Now these tracks don't stay relevant forever because they get steep enough to where price is just not going to come back to them. But yeah, it's just trend lines that connect to levels. I had noticed the downtrend lines, the blue lines here, back from this low here. So that's where I first connected those, like, you know, personally, like when I just was playing around. I noticed, okay, this pivot, there's a connection to the equal lows here, and then looking at it getting pulled out into the future now is pretty nuts, right? It's like you're seeing prices really respecting that. I don't know why it does, guys. I'm sorry, I don't know why. And you even see it now, you know, wicking off of it. I don't know why it does that, but I've noticed it, and I just put it on the charts sometimes. It usually helps me kind of frame my mind, and it keeps me from overreacting to stuff. You just have to remember, like, all this stuff is all algorithms. Why the algorithms choose to do this, I do not know. I do not know.
So could you do that for the top side as almost like a resistance as well?
Yeah, but it's like you have to really mess around and like see it. Like you have to draw a bunch of lines, and it may start emerging. But again, it's this, I would say, is more artsy. It's not like at least I think it is. Like it's not like it's not as like objective as like how liquidity works. But yeah, you could even from here to here. It doesn't really make that much sense when you kind of think about it. Why is price reacting to this what seems like a random peaks? Like, I get, yes, they are the highs over here, but you would think that I'm having a lot of trouble putting that on. There we go. You would think that the 2020, like from 2020 in August to, was it February 2020, like these two high peaks, like why is it still respecting that like almost 2 years later? Like it's crazy, but it is, you know, it is. I don't know why, but it is, and that's just how it is. That's why I say, you know, mess around with trend lines. You might find some interesting stuff. But yeah, and and Algorand, you know, talking about Algorand, I'm a big fan of Algorand. I'm not too worried about this. It's one of the coins I have like a lot of expectations for in the future. I think it's going to do quite well, but it's going to keep going down. But I think we're nearing the end of that. This pivot, I don't think we're done going down forever, but I do think we're done soon for a new leg up for a lot of these coins, Algorand included. A lot of people got scared out yesterday, so there's a lot of money on the sidelines now that's going to be chasing price, I think. But hopefully, sorry, JD, I don't really think I answered your question, but it's just some anomaly I've noticed. I guess it's an anomaly. Okay. Any more questions or anything like that?
Oh, another one. If you're going to be going back to your fibs, if you're going to be using them, does it matter whether it's log or just normal? Just in case anyone watches the vid.
Yeah, that's a great question. Yeah, that's a good. I do log. I keep my charts on log for the most part. So yeah, I do log. But if you don't do log, then obviously don't put the fibs on log. It'll work either way. Log is just going to help with the scaling. The pullback strategy is good on any asset. Yeah, on any asset. Obviously, it'll work on trending assets the best. And I guess let me share, like, if you're like brand new to trading, like, so like brand spanking new, and you don't really like have much history or experience with like looking at charts, then I would tell you is like put on a moving average or something, because let me actually have a thing here. Yeah, so like put on a moving average for yourself, because what'll end up happening for you, and it'll make it easier to let you know if you're in a trend, right? And that's important. That's important for you. If you're having trouble seeing that, you definitely want to do that. And I guess you would do like the 200 too. Is that right? I guess so. The 200, I guess, is correct. Yeah. So you just have some sort of moving average, like a long-term moving average, to tell you what you should be looking for, and that'll help you be like, okay, I should be looking for shorts, or okay, I should be looking for longs, and then just use the Fibonacci strategy I just showed you with that. Okay, so if you do that, it might make it easier. And yeah, again, I don't personally use moving averages, but it's there for you. Again, if you want to go, let's say you were trying to go long Bitcoin now, right? So here's your low. You could pull up to the high here, okay, or here, but it would be the high here because guess what? You know, this price action, you had a high pivot. You had a high pivot right here, right? So before this existed, you had a high pivot here, but price didn't come back to any of the levels to fill you, and it broke out. So this would be your new high, swing high. And look what's happening. So you actually did get filled here. You haven't gotten to the 50 yet, but now you're seeing price coalesce all over the moving averages, tapping the 200 on the daily. So we'll see what happens, right? But if you're doing the strategy, you're already in. You're in Bitcoin long because you're in an uptrend, right? You're above all the moving averages. If you understand the lows, low here, higher low, maybe another high low, you know? So, you know, that's, and where would the invalidation be? You would, I mean, look at, like, you would be looking to play this entire zone here, right? So this, you would have orders all throughout here, 2 of the 5 already getting filled, 2 orders getting filled, and your invalidations down here. What would the risk look like? So if you got filled right now, let's say everything got filled and you did it my way, you're at the 61.8 average. That means your risk is, you're risking about 17%. Okay, again, that's if you did it as a pyramid. If you did it even, all right, if you did it even, which you may want to, might be easier for you, you're risking about 20.82%. But again, that's also less money, right? Because you did even percentages. And where would the target be for Bitcoin in that scenario? Well, let's see. So from down to up, because we're looking to go up, pull back to the swing low. So right there. I messed that up. I always mess that up. There we go. Where would your target be if your average entry was like the 50 percentile? Would be about 36,789, right? If it was the, you know, so you're looking at the upper 30s, right? Whether you get there or not, who knows? But that's where you would be looking to take profit. But let's say you didn't want to do that. Let's say let's say Bitcoin breaks up past these highs. What's going to happen is all the moving averages are going to be pointing up, right? So you're going to be in profit, all the moving averages going up. So you may not be like, I don't want to take out here because what if it goes to 50,000? I don't know, it might. So instead, you might choose to trail your position, right? So instead of taking it out at a certain level, you might look to get rid of the trend-based fibs and look to try and ride an uptrend. Okay, so this is a way, again, this is a way where you can use this as you know, a way to enter a trend as well, right? So you just do what you guys think is comfortable, but the secret sauce to why this works is the position sizing. That is why. Okay, like that's why it works. And if you start small, what will happen is you'll learn to be okay with drawdown, and you'll find that drawdown in this strategy is your friend. Drawdown with this sort of strategy ends up being your friend. So yeah, and this strategy does take some patience though. Yeah, that's for sure. I don't want to. The cons of this strategy are you will deal with a lot of greed issues because you may find yourself not getting your full position filled. You'll get some like FOMO impulses, and then also it's slow, right? Because you're buying into, you tend to be, if you're correct when you're buying in the trend's not ending, you're buying where smart money is buying, right? So you're buying on the pullback where people who are patient are buying. So if you do that, you might find yourself in a trade for some time, depending on your time frame, of course, and then hopefully you get rewarded for it. So yeah. Any other questions on this? If not, I'll just end the recording. But I'm open to hanging out, guys, and I don't really plan to go anywhere just yet. You know, actually, I'm gonna end the recording now, but I'm staying on. But yeah, because this video is gonna be pretty long. So everyone who is here live, thank you for being here, and anyone who missed it, that's okay. Hopefully, watching this, you found something valuable and you enjoyed what you learned. If you have any questions, make sure to leave a comment down below or join the Discord if you're not already in there. It's the best way to get in contact with me. And of course, always remember, be patient, be vigilant, and be nimble. I love you guys. Take care. Bye.